If the target profit point is at FVG, place the take profit level at entry point of FVG. So if there is a FVG here, fair value gap. If there is a fair value gap here, if there is a fair value gap here, and if you have enter trade from this area, the reference thing, put your take profit here. Because sometimes I had kept my take profit at this level and I have lost my trade. The price would go up here, mitigate the fair value gap, and then come down. So whenever I'm taking a trade and I'm targeting fair value gap, I always put my take profit at the lower level of fair value gap, and in downtrend, I put my take profit at upper level, like the level which is near to my entry point. So I'm making that. Okay. If there is a long candle that created change of character, fair value gap, or leaves order block or support a resistance area, we do not wait for the pullback. So if there is a long candle that is formed fair value gap. So let's see what the fair value gap. Yeah, I'll be discussing about the fair value gap later in this video also. I think this video will become too long, so maybe we have to do this video in different parts. For fair value gap, to be able to say that this is a valid fair value gap, if fair value gap is created a long, so to become fair value gap, you have to see three candles. So this is a fair value gap now. This is a fair value gap. We check the highest this week of the candle and then create a fair value gap of this and this candle. So if it has created a fair value gap, so if it has created a huge gap in this fair value gap, then we will not wait for price to enter this fair value gap like 50% or below that, because sometimes what happens is it will just toss this and then move again. Sometimes it will happen like this. I think I should be making this smaller. Yeah. Sometimes it will create like this. So the price will never come back to this fair value gap. Okay. Now another. If you have kept the take profit or stop loss, let it hit either of one. Do not move the take profit or stop loss. So if you have kept your take profit, if you have kept your stop loss, let it hit one of those. But to let it hit one of those, you have to see that you have to keep your risk reward ratio valid. Okay, you have to at least have your risk reward 1:2 risk reward ratio. But I will not be following this for some time, because yesterday I took a trade. I kept my take profit. I put my stop loss. I entered the trade. The market went into consolidation, and after that, I still had a chance to exit the trade after I got my reward 1.5:1. So even if I had exited the trade, I was already in profit. But I remembered my this rule, and I stick with this rule. Then after a while, after being in consolidation for a while, what happened? After being consolidation for a while, it went to hit my stop loss, and then I lost that trade. I was already like 75% win rate. I was already like 75% with my take profit, but then after that I just lost the trade. Okay, so I have to think about this one also. And if you lose the trade, do not trade until and unless you are mentally calm. Take a break of at least 2 hours before you trade. So what usually happens with all of us is that as soon as we lose the trade, we will try to do revenge trade. So previously, when I had written this, I used to take a trade like minimum 2 to 3 trades per day, and sometimes I used to take trades, 5 trades, 4 trades, 5 trades. But nowadays, I am taking maximum 2 trades per day. And if I lose a trade, then I don't trade. I don't trade after on that day. In rare conditions only, if I see a perfect setup that aligns with my strategy, a perfect setup, and then only I am entering the trade. Otherwise, I am not entering the trade. I am not taking another trade. Do not enter the trade when the price is in consolidation, and check what the 1 hour chart or candle says. So like I had said earlier, I used to trade in consolidation when the price was in consolidation, and I used to lose a lot when the price was in consolidation. So when the price is in consolidation, I have kept that. Do not try to trade in when the market is in consolidation, and check 1 hour candle, 1 hour chart, because higher time frame chart shows better things. So yeah, no trade is better than bad trade. You feel like you will miss out. You feel like you will miss out, like fear of missing out. FOMO will kick in. But you see that, and you will be afraid to take a trade. So at that time, what you have to think is that do not take the trade. If you think that it may go against you. Like here, ask yourself, will you be surprised if this goes against your prediction? Yeah. If it is yes, and you are afraid to take a trade, do not take, because no trade is better than a bad trade. Saving your capital is better than losing your capital. Do not fear of miss out. So do not fear of missing out. Do not trade if you are not comfortable. You don't have to take a trade every day. Like I used to trade. I used to trade 3 trades, 4 trades when I was beginning. But now I am taking maximum 2 trades only. But that is also in rare condition. So do not take trade every day. No need to take trade every day. You can take a break. After a break of structure, confirm that it is trending towards the brand. This is not break of structure. This is change of character. So if there is a change of character, then confirm that it is trending towards the position. To confirm that it is towards the position, check the higher time frame, check the lower time frame, check like the trend of the market. What was the higher time frame candle says about the market? So those things just you need to check. If supply becomes resistance and resistance becomes support, if supply becomes resistance, support becomes, this is not supply, this is support. If support becomes resistance and resistance becomes support, it is also the sign of entering the market. So if the market is like this, it has created a support, and then after that, so here we have a liquidity also. After that the market went up, and then what we do is we wait for the confirmation. We wait for the fair value gap to create. Okay, so let's say that it has created a fair value gap here also, and the market came down here, and we wait for the confirmation, because sometimes it will just disrespect the fair value gap and then come straight down. So we wait for the confirmation from the fair value gap, and then it should fair value gap. If the fair value gap creates a new support or resistance zone in previous support or resistance zone, then that is a good fair value gap. And now what? And if it becomes like this, let's say, if it respects the fair value gap and becomes like this, creates a new support, then you can enter a market. I'll enter a market here, take profit, and stop loss just below this stop loss. Okay. Look for the support and resistance area to enter the trade. Do not risk more than you can afford to lose in a single trade. So what I used to do was I used to keep my take profit like 2:1 ratio. But sometimes 2:1 is like let's say for example this used to my ratio. You see here we have more than like 3:1 ratio, right? And I used to take this trade, win, another trade, win, another trade, win, another trade, a little bit of increase, little bit more, okay, and win, another trade, same, little bit more, and here also win. So I have won 3 trades, but I have risked how much total? This plus this plus this. This is my total risk in 3 trades. I didn't risk consistently. In some trade more, some trade, and then 3 win. Okay, I have 3 win. 3 win. Now in next trade, I took another trade. Reward this much, risk this much, and then reward. I found the perfect setup, and then risk this much. Okay, I am still following my rule. So even here also you can see my risk to reward ratio is like more than 2:1. Okay, for example, let's say that reward is this much. But what happens is, you see, yeah. And after that, I took another trade, reward this much, and risk this much, and maybe even more. Wow, maybe even more. Nice risk to reward ratio, better than this one. But if I lost this trade, then what would happen? Right. Okay, this one. Just taking this side. Just make this a little bit better. Okay. So, and you see here, I still have good risk reward ratio. I am following my rule. I am still following my rule. Minimum put 2:1 risk reward ratio. But then what happened? I lost 3 wins with good risk reward ratio. Here you can see it was better than 1:2, better than 1:2, like 1:5, even 1:5. You can see lost 3, but next I got 1:2 or whatever, like 1:5, 10, okay, whatever it is. But then what happened? I lost this trade. Then 1 loss. So 1 loss is, this became 1 loss is greater than 3 wins. I lost more than what I won in 3 trades. So when you are risking, always risk the amount, how much amount you are okay to lose.